So let's start today's session. So we are going to start the session as fundamental of currency market, where we're going to be taking understanding what is the forex market all about, what are the major participants in forex market, and at the same time we understand what is the base core concept of forex market, what are the currency pairs, what are major currency pairs, minor currency pairs, that all we're going to be continued learning. So we'll start with first topic, that is Forex. What is Forex? Forex basically is a foreign exchange market where globally currencies and commodities exchange at a price. Suppose if some person wants to visit one country from suppose in India, from India we want to visit to Dubai. So what we're going to do is the first thing we're going to be exchanging the currencies. So this currency exchange has to have a value. Like for 1 dirham, approximately there are 25 INR Indian rupees has to be paid. So if I want 1000 dirham, there has to be a 25,000 rupees has to be Indian rupees has to be paid. So simultaneously, if US dollar has to exchange to dirhams, if there any other currency can be exchanged in terms of dirhams. So this currency exchange is called as foreign exchange. So forex is basically derived from two words. First, for ex for FOR from foreign and EX from exchange. So basically, it's exchange of two currencies. Now, when we exchange these two currencies, it is in the form of a rate, a standard rate. For example, if I have to convert 1 dirham, I require around approximately 25 Indian rupees. That's INR. So 25 is the rate at which the currency is basically exchanged. So there's a rate and there are two currencies which get exchanged. Now what happens? Basically, there is one currency that has a sell value, another currency that has a buy value. For example, I want to convert INR to dirhams. So basically, I am selling Indian rupees and actually I'm buying dirhams or I'm buying USD. For example, if I want to visit US, so at the same time I will basically sell INR to buy USD, that is United States dollar. So basically, there is a current currency exchange rate currently that is approximately 90 rupees. So for $1, I need to pay 90 rupees. So that is the basic definition of foreign exchange. Foreign exchange market is a decentralized global market where currencies are exchanged. So basically, what is forex trading? When there is a physical exchange, it is called as foreign exchange or currency exchange. And when that actually does, we do that on in a digital format where we don't actually physically exchange the currencies. We actually just exchange the currency on a digital platform, that is called as forex trading. So what is the core function of forex? The core function is actually to basically support or be the backbone of international trade, banking, tourism, and other investment flows, where a person from one country wants to invest in any other country or wants to go to any other country or wants to do anything in terms of tourism to other countries. That is the basic core of forex is all about. If we talk about the regulation, Forex is not regulated by a single body. It's a global network of financial institutions. So basically, it's a decentralized market where nobody, no, not a single body is controlling the Forex. Whereas the multiple, basically, international foreign network is basically a part of this complete Forex market. It is one of the biggest market in the globe. In the forex market is one of the biggest market in the complete globe. So basically, that is how it is. So what is forex market? Let us basically deep down into some technicalities. So as I already said, it's a decentralized market and it's an OTC where over the trade concept is basically been executed, where a retail trader just put a trade, it directly goes into the market and the market reverts it into the bank. The total volume, the daily transaction for this market, for this forex market is $7.5 trillion. That's the daily turnover of this market. The biggest advantage of this market is open 24 by 5 and 24 by 7. 24 by 5 in terms of currencies and commodities, and 24 by 7 in terms of when we include crypto into the picture, it actually 24 by 7 it is basically. And the most important thing, okay, in complete forex, basically the USD is the benchmark. So wherever we see a forex trading happening, wherever the forex is happening, the base currencies is basically USD, because it is that currency which is universally accepted by majority and the complete current countries across the globe. So basically USD, whenever we are doing foreign exchange, the base mode of the currency is USD. So I repeat, what are the deep down the advantages of forex? First, it's a decentralized market, so there is no manipulation happening. There is no body who is controlling and regulating these things. It's a institution which is connected with global financial institutes. The daily the daily turnover of forex market is $7.5 trillion base. And forex market is open 24 by 5 and 24 by 7. 24 by 5, 20 Monday to Friday for currencies and commodities and indices, and 24 by 7 for cryptocurrencies. And the basic landmark and the basic currencies which is used in forex is basically USD. So let us go ahead. Why does forex exist? So for as I already told, the basic scope of forex is to do cross border trading. When one country wants to import and export the goods and services from other countries, the medium is through which it can be executed is basically forex. When when the travelers want to travel from one country to other country, the basic mode is basically tourism. It again consists of forex. When there is a when there is a foreign domestic investment, that is FDI, for any business or for any business to invest globally, the basic forex is always required. Government functioning for managing the central bank or reserve bank, basically again the forex comes into the picture. And with all the major financial markets, just like hedge fund managers and all the major markets who basically control the financial market globally, also have the base of forex into it. So that is why this market exists. So this is all about what is forex, how it is basically what is the importance, what is the need, and what do we get in terms of financial planning is all about. Now, the advantage why forex is an high opportunity market. Advantage why forex is a high opportunity market is basically because it's a global market connected throughout the globe. So the maximum liquidity, the high liquidity market. Wherever there is a high liquidity, there is always a chance of getting basically profits from getting buy or sell executions, even through tight spreads and low cost of investments. So basically, the basic advantage of forex market is high liquidity. Second, volatility and leverage. And third, two-way accessibility. Let me explain this concepts in a very detailed manner so that you'll be able to understand. What is liquidity? Liquidity, where you basically can instantly buy or sell the currency pairs at a very lower cost. That is liquidity. Now, what is volatility? Volatility, where maximum numbers of buyers and sellers are there in the market. There is a volatility in the market. The price movement is on a very regular basis, that are not sideways. So basically there are always a chance of increasing profitability opportunity by getting into these things. Leverage in forex, generally there is 400 to 500 leverage that can be used. Leverage is something that we're gonna be deep diving in the upcoming sessions. But let me give you a glimpse. If I have a leverage of 500 and I have $100, I can have a buying or selling power of 500 100 into 500, that is 500 times. I can have a leverage of executing, buying or selling the prices. And it's the only market where two-way accessibility is there, where a person can always we can sell a currency and earn a profit. We can buy a currency and earn a profit. So in stock, what happens? Whenever we buy a stock of a company, if the stock goes up, then only we'll make a profit. If a stock goes down, we don't make a profit. But in forex market, in forex trading, the biggest advantage is if you sell the currency and the market goes on the lower side, on the seller side, we earn the profit. When there is a profit margin on the buy side, we earn the profit on the buy side. So there's a two-way accessible market. So this is all about getting into as an high advantage of an forex market. So now this is where the basic difference lies: stock market versus forex market. So let us compare the stock market versus the forex market hours. So basically this is the biggest feature of of the forex market, that it is open 24 by 5. So Monday to Friday it is open 24 by 5. So basically, whereas stock market has limited timing, just as it starts from 9:15 a.m. in the morning and 3:30 p.m. it's end up. So basically there is a, for person who is a working person, for market which is 24 into 7 open, we can actually have that advantage of having trading for 24 by 5. Liquidity, as I already told, the highest liquidity in the world, and wherein in the stock there is always a moderate liquidity, because there are n number of stocks. In currencies there are limited pairs, so there is highest number of liquidity throughout the world is available. Volume per day, as I've already explained, the volume per day, the biggest volume of stock forex market is $7.5 trillion per day. So daily turnover of forex market is $7.5 trillion, whereas for a stock market, it is roughly around $200 billion. So there is a drastic advantage of volumes. Where there are volumes, the people can get more profit. There are always an opportunity to create more profits when there is a volume trading happening. Whereas in the stock market, there is always a limited volume trading that is happening. Market structure, as I've already explained, that forex market is a decentralized market, whereas stock market has centralized exchange. So that limits to the central exchange. There's a regulated body that controls, but there is no regulation body. It is connected by complete global financial institutions. The profit directions, basically, in as I told, the in forex market, basically you can buy and sell, long or short. We tell it in the common language. We can actually book the profit. But when it comes to stock market, we primarily book a profit when generally there is a buy trade. If you buy a stock of a company and that stock of the company goes up, then only you'll make a profit. But in foreign exchange or in forex trading, basically if you take a sell trade, and the market goes down, you earn profit. If you take a buy trade, market goes up, you make a profit. So there is a two-way of profit making process. So basically, in a nutshell, if I have to explain you the concept of forex versus stock market, there is always an advantage in forex market, as it is 24 by 5 open. It has the highest liquidity in the world. The volume, as the liquidity or the volume per day is like $7.5 trillion. Market structure is decentralized, so it is open and controlled by the complete global financial institutes. And the most important thing, you can actually make profits by buying the currencies or selling the currencies both at the go. So basically that is the basic difference and advantage of forex market. I hope I am clear at this point. We'll have a Q&A session at the end of the session. So whatever queries you have, you basically can note it down, and we'll have a complete Q&A sessions after we wind up the sessions. Okay, so let me explain who are the key participants. Who are the key participants of forex market? Central bank. Central bank of all major countries are the basic key and important participants of forex market. That includes money controlling policies, currency stabilities, and interest rates, because they have to basically take care of all the things. So they are the major players of participants of this forex market. Commercial banks, commercial banks like JPM, HDFs, HSBC, handles volume trading in a tier international market. So that actually they are also the participants of key market practice. Investment banks and hedge funds. Investment banks and hedge funds are the major participants in this market. Retail traders, the traders like us, are basically also a participant of this market. The traders like us who basically trades on a retail volume on a general trading terminals, that is basically this consists of the market participant. So all the major central banks, all the commercial banks, all the investment and hedge funding bankings, the corporates, and basically the retail traders are the key market participants of Forex market. So let me go ahead and now, as we say, Forex market is more about exchange, it's more about currency market. So what is currencies and how basically we'll learn more about currencies. So let us deep down on currency pairs and currencies that consist of this market. So the 8G major currencies are there. Let me just read out that currencies for you. United States dollars, that's USD. It is basically primarily covers 90% of the transactions that happens throughout the globe. The other major trading currencies is euro, that is symbolized as EUR in foreign market. Basically, wherever we write the currencies in forex market, so basically we write it in three letters. The first two letter of the currencies that indicates the currencies are the country name. Suppose USD. So US stands for United States and D stands for dollar. So primarily all the currencies are being given at that point. EUR, European Euro, that stands for EUR. GBP, that's British pound. So basically that stands for GBP. Japanese yen, so JBY. Canadian dollars, that's CAD. Australian dollars, that is AUD, odd. New Zealand dollar, NZD. And Swiss franc, that is CHF. So these are the major currencies. Now, why these are major currencies? Why? Because all these countries are basically developed countries and they have the currencies that are mentioned as major currencies are the most stable currencies of globe. So they are called as currencies, major currencies. So we are going to be learning new concept in this forex market class. So the first concept that we are learning today is currencies, that is major currencies. There are 8 major currencies. The currencies are USD, Euro, GBP, JPY, CAD, that's Canadian dollar, AUD, that's Australian dollar, NZD, that is New Zealand dollar, and CHF, that is Swiss franc. So basically, these are 8 major currencies, and we have a permutation combination of currency pairs through this currencies only. We'll go in the next slide where I'll explain you how the currency pairs are made up. So first thing that you have to make sure, you have to understand what are major currencies. So major currencies are these 8 major currencies, which includes US dollars, which includes euro, which includes GBP, that's Great Britain pound, Japanese yen, CAD, odd, NZD, and CHF. So these are 8 major currencies. Let us go ahead and I'll give you the icons and justification of this 8 global currencies. Again, if you need, you can take a screenshot of this slide. So that can be taken as a reference point, because you're going to be connecting majorly through this major currencies, because we're going to be making pairs out of this global currencies. So if you want, you can take a screenshot of this slide. That can be help for the future reference. So now we move on to the major pairs, that is major currency pairs. So any pair that includes USD as a combination of any major currencies. Suppose there are 7 major pairs. So major currency pairs. What are major currency pairs? So major currency pairs are the combination of all major currencies in the combination of USD. Because as I told you, USD is that currency, United States dollar. It's that currency which is the most acceptable currencies throughout the globe. So any pair combinations with global major currencies, that is USD, and with a combination of only major currencies are considered as major currency pairs. So what are that pair? We have 7 pairs. Euro USD, that's one pair. GBP USD, that's second pair. USD JPY, that's the third pair. USD CHF, that's the fourth pair. AUD USD, that's the fifth pair. NZD USD, that's the sixth pair. And USD CAD as the seventh pair. So how you can make this understand in your mind? First, all major currencies are called as major currencies. There are 8 major currencies that I have already explained. So a combination of major currencies with USD is called as major currency pairs. So you are actually understanding the new concept of major currency pairs. So when all the major currencies make a pair with USD is called as major currency pairs. And you can also take a screenshot of this major currency pairs, because you're going to be utilizing this concepts. We're going to be learning more typical words, terminal knowledge on forex markets. The first thing that we learned is currency, major currency. The second thing that we learned is major currency pairs. So these are major currency pairs. You can take a screenshot of this. Euro USD is the first pair. GBP USD is the second pair. USD JPY is the third pair. USD CHF is the fourth pair. USD CAD is the fifth pair. NZD USD is the seventh, and AUD USD is the seventh major currency pair. So these are 7 currencies pair, major currency pair, where major currency pairs are basically major currency pairs are the pairs that basically has a combination of all the major currencies with a common USD. The most common thing in all major currency pairs, that is USD. Is that okay? So we're going ahead for the next thing, that is minor pair or cross currency pairs. So minor pair or cross currency pair, we say it as minor pair or cross currency pairs. All the currency pairs without the combination of USD. Earlier, the major currency pairs, all the major currency pair with the combination of USD are major currency pairs. All the major currency pairs without the combination of USD are called as minor or cross currency pairs. So what are that pair? We'll see into the next slide what are basically that pairs. So let us deep down into cross currency pairs. So see, in major currency pairs, there is always a combination of USD. In cross currency pair, there will be all major currencies, but without the combination of USD. Suppose, what are the currency pair that forms with Euro? Euro GBP, Euro CHF, Euro CAD, Euro OD, Euro NZD, Euro JPY. So these are cross currency pairs. The currency pairs that make combination with JPY, JPY CHF, AUD JPY, GBP JPY, CAD JPY, NZD JPY, and the cross currency pairs with GBP, GBP AUD, GBP CHF, GBP CAD. So how will you differentiate? Okay, so first you need to understand what are major currency pairs. So major currency pairs, before understanding major currency pairs, you need to understand 8 major currencies. So if you understand the 8 major currencies, you will be able to understand what are major currency pairs. All the major currency pairs with the combination of USD is basically major currency pairs. All the combination of major currencies without USD, without United States dollar, are called as cross currency pairs, or they are also called as minor currency pairs. Okay, so basically that is how you can basically take this point. You can also take a screenshot of this cross currency pairs, because in our upcoming sessions, in the sessions that we're going to be continuing for this this forex market training course, will be you'll need this testimonials. Okay, so the third category of currency pair are called as exotic currency pairs. So all the upcoming currency pairs basically that are not major currencies or not a combination of minor currencies are formed as exotic currency pair, which are basically getting developed and getting more and more of volume. So they are called as exotic because they are getting the more volumes into this. So what are these exotic currency pairs? You can take an example where Turkish lira with euro, take a US dollar with Singapore dollar, US dollar with Swedish krona, US dollar with all the other exotic Hong Kong dollars, South African rand. So basically, these are called as emerging currency pair or exotic currency pairs. The volume in this currency pairs are very limited as of now, but these currencies are getting basically developed. These are developing countries getting into the exotic currency pairs. So if I categorize, major currency pairs have the maximum number of volumes of the global forex market. The other market volume liquidity is basically into the minor or the cross currency pair, and the limited liquidity is basically is into exotic currency pairs. So that is how we understand three basic types of currencies. I am explaining it to you once again. I'm repeating it once again. There are eight major currencies. There are seven currency pairs. Major currency pairs are the combination of major currencies with a combination of USD. So all the major currencies with the combination of USD is called as major currency pairs. All the major currencies without the combination of USD is called as minor or cross currency pairs. And there are some of the examples of exotic currency pairs. Is that completely understood? So we are going ahead. Okay. So what are, as we suggest that the market has 24 by 5 availability. So basically the global market sessions. So why it is 24? Because there are multiple zones that gets open. We have all the timing as far as Indian Standard Time is concerned. So the first session of global market starts 3:30 a.m. and it is available till 12:30 p.m. It is called as Sydney session. The second session that the starts from 5:30 a.m. and it is there till 2:30 p.m. And the third session, that is London session, it starts from 1:30 p.m. and it is there till 10:30 p.m. And the New York session that starts at 7 p.m. in the evening and that is available by 4:30 a.m. Indian Standard Time. So basically, according to this, we ensure that this market is 24 by 5 available to trade. A person can trade 24 by 5 Monday to Friday in this global financial market. So what makes this session difference? So basically, if we talk about Sydney session, there is a low volatility because it's the beginning of a cycle. It's the first global session timing that starts. So there is a limited volume and it's the start of the session. The best pair to trades in this market is AUD and NZD pairs because basically it has a Sydney zone. Apart from that, there's the second session, which is a Tokyo or Asia session that starts 5:30 a.m. and it is there till 2:30 p.m. It's the active Asian market. So basically, there are a flow of JPY, AUD, USD, and JPY are the basic pairs, are the best pairs where has maximum number of volumes. London session or the Europe session starts 1:30 p.m. and it is there till 10:30 p.m. So the most volatile and liquid market is London session and the US session. So basically, the best trading pairs or the best trading tools to trade is Euro, GBP, and USD pairs. So because that are the most volatile pair in this timings. And the other market, the last market, the most volatile market is basically US market that starts from 7 p.m. and it's available till 4:30 a.m. USD and active news are basically always all the news are basically in the US session only because the major news that impact the global market is derived through US news. So that is the time zone where you most actively gets the news. So we're gonna be learning more about news, the technical trading, technical analysis in the upcoming sessions. And the most important session of US is where you can trade all the USD pairs. That means all the major currency pairs can be traded. And the most important thing, the most volatile pair of Forex market is gold, that is XAU USD. We can trade, that's the best time to trade this type of currency pairs. So let me give you one more basic concept. In Forex, there are total four major things that are traded. The first thing is currencies that are traded. The second things are commodities like gold, US oil, silver. All these things can be traded. That terms at commodities. The third that can be traded is indices. So basically, it's a Sensex of multi countries, and just like Nasdaq, US 100, US 30, that are basically called as indices. And the fourth thing that can be learned is basically crypto. All the cryptos and all the crypto markets are basically part of the fourth part. So totally we have currency pairs, we have commodities, we have indices, and we have the cryptos which can be traded in global financial market, that is Forex. So basically all the other threes, that is currencies, commodities, and indices, are available 24 by 5, and cryptos are available 24 by 7. So that's how the complete this thing is all about. Now, uh, there's one thing in the session. There's a power of overlap. There are two sessions which actually has overlap. London and Tokyo sessions have an overlap from 1:30 to 2:30. Both the sessions are available. Both the markets are both the liquidities are available at this point. So basically, 1:30 to 2:30 p.m. is the most volatile player as London traders enter into the market with that market. And one more overlap is from 7:30 p.m. to 10:30 p.m., where London overlaps with New York market. So that is where the highest volatility, highest momentum, highest liquidity is basically needed, because two largest financial sectors are active. The London session is also active. The UK session and the US session are basically active at the same time from 7:30 to 10:30 p.m. And we are talking about Indian Standard Time, right? So according to the time zone, let me give you a basic concept. What are the best time to trade and what are the worst time to trade? The best time to trades are when London session open. That is from 1:30 to 4:30 p.m. That's the good, short breakouts are always available in this session. The other best time to trade is US overlap session, that is between 7:30 p.m. to sorry, that is from 7 p.m. to 10:30 p.m., where highest momentum and effective volatility is there. And US session when starts, that's the best time to trade, because the most number of trends basically happens with this session, that is from 10:30 to 1:30 a.m. That I'm talking about Indian Standard Time. The worst time to trades are basically after US session close. That is where we have the low volumes. After major news, whenever there is a major news release, that's a high risk trading zone. Whenever there is a low volume in Asian or midday time, after Fridays, basically mostly after 10 p.m., there are major volatility and major breakout breakthroughs in the market. So that's the worst time to trade in this market. So that was all about the technical concept of today's session, where we understand what is Forex market. Let me give you a basic overview of today's session. What we have learned. We have learned what is Forex. I've given you the example and definition of what is Forex. When two countries exchange the currencies with a common parameter of the rate exchange is called as foreign exchange. When it is done physically is called as foreign exchange, but when it is done digitally, it is called as Forex trading. So basically that is how we deep down into Forex. What are the basic advantages of Forex and what do we get as a leverage of Forex? Okay. Other than that, we explain what Forex is all about, what exists, the highest advantages of Forex market. That is what we explained it to you. The difference between stock market and the Indian market. I've given you a glimpse of why Forex market is way better than Indian stock market. How can this give you a leverage? And there's always a leverage that we're going to be learning in the next coming session. So that is how That is going to be who are the key participants. That is what we learned. And then we deep down into the currency pairs. We got what are the 8 major currencies. Then we learned what are basic 8 global currencies. We learned the major currency pairs. These are the major currency pairs. Then we learned the minor currencies or the cross currency pairs. These are basically the cross currency pairs. And then we got talked about exotic currencies. These are the upcoming or the just the developing currencies that are basically floating into the forex market. So we learned about that part. Then we talked about the global market session, as we talked about the 24 into 5 time zone of the forex market. We had a breakup of all the sessions where Sydney, Tokyo, London, and New York, there are 4 different sessions on 4 different time zones according to the Indian standard time. This has been basically a part of it. Then we talked about where are the power of overlap, where we can have an advantage of trading into this session, where maximum number of liquidity and maximum number of volatility is there. So that is we learned. We understand what are the basic best time to trades and what are not the best time, what are the worst time to trades that we have that we should usually avoid. So this is all about today's session. Now let me give an idea about Daman market, who has organized this session for you. What are Daman markets? What basically they Daman markets are the premium trading service provided offered by Daman Securities LLC, offering an extensive access to the forex and CFD market, including stock, indices, commodity, cryptos, futures, back and over 2 decades of financial industry experience. We are trusted and infrastructure with modern tools to serve the region's fast growing and trading community. So basically, if I give you a short explanation about Daman market, they are here. They are actually a premium broker, international broker, and they are there from last 2 decades, basically. And one of the trust why Daman market has to be opt. They are the trust. They are trusted support system. Their conditions to market is very conditional. Expertise. They have leading education things. As we do online and offline sessions, you are actually getting a benefit of understanding a free session that has been conducted through Daman market. For any Q&As, whatever we have learned, you can type all your session or all your questions can be typed in the chat mark, and I can take all the sessions accordingly. For opening up an account or for any queries about Daman market, you can contact the Daman market executive. The number and the email IDs are basically mentioned. So for any technicalities, for any inquiries when it comes to Daman market, you can contact ma'am. That is basically associate from Daman markets. The email IDs and mobile number has been given, so you can contact them. So this was basically for today's session. Now we'll take the session on Q&A. So whatever questions are there, you can always type it on the chat box. We'll be able to take that things. Thank you so much for attending today's session. So if you have any queries, uh, admin can all give us any Q&A. Is the options available for them? Okay, perfect. So any questions that no questions so far? Okay, yes, I'm able to see. So no question means there are two things. A, whatever has been explained is basically completely understood by the participants. And if you have any questions, you are basically being welcomed. For any queries, for any service that is related to Daman market, you can always get in touch with the Daman market team, or Daman market team will get in touch with you with regards to anything with this Daman market is all about. So that was all about today's session. We'll meet up for the next session. Okay, now I have a question for you. When you want the next session to be? So I am asking the participants when you want the next session number 2 to be placed. When we should have our second session. Okay. So basically, that's all. We'll wind up for today's session. Thank you so much for attending session. We'll update you about the second session on your email IDs and on your contact number whenever that is scheduled. Thank you so much.